want to short any stock, be that what's your favorite like overvalued stock? You hate Tesla, you hate GME, or whatever it is that you hate, Bitcoin, gold, whatever asset you call. When the price of this asset denominated in dollars, when you're selling this asset, what are you doing? You are selling stocks and buying dollars. You are not just taking the short position on that asset, you're taking the long position on dollars. And you know what the Fed is doing? In response, they're saying, oh, we're the monopolistic producer of dollars. You want dollars? Here, get some. And you can, so the asset price rally over the last year was a rejection of dollars. It's not that the assets went up so much, it's that people stopped accepting dollars as payment for them. So every rally in every asset could be described, whether you think about Bitcoin or gold or silver or real estate or individual stocks. Of course, it's a patchy rally, but basically this is people saying we no longer accept dollars in exchange for this asset. Bitcoin has limited supply and it have very also inelastic. Bitcoin has extremely inelastic supply curve. You increase demand, it jumps. Stocks have a little more elastic supply curve because once if you beat them up, they start IPOing. It's not an immediate process, but there will be a little bit supply of stocks meeting demand. But still it's not super elastic, right? So if you're thinking about this, it's not about the value of things, it's about how much cash is coming for them. What I did, I basically compared the performance of Bitcoin with precious metals and said that Bitcoin, when there was a burst of Bitcoin in 2014, I said it does not look like a burst of a bubble, it looks like a correction in the precious metal complex. And in a compressed time frame, that's how it behaves. And what I said is that the story of Bitcoin is a story of it accumulating the street cred, accumulating the credibility as a store of value, just as gold accumulated over several thousand years. Bitcoin is accumulating over 10 years. And then I said the altcoins are not, shouldn't be compared to Bitcoin, just as copper is not compared to gold. They have utilitarian use of industrial uses. And I think so I'm not going to make right now a bear case or a bull case for Bitcoin. I have no idea, because I hear lots of pros and cons and problems and supports. But what I wanted to point out that when I hear in public discourse, I hear a lot of people what I think are confusing what is a bug in Bitcoin and what is a feature, just from my perspective. Obviously, some people may disagree. I think the fact that Bitcoin is not a medium of transaction, that it's not easy to use it to wire it or whatever, I don't think it's a bug, I think it's a feature. Because if it wants to be store of value, it should not actually be easy to move it. The fact that Bitcoin is very volatile against dollar, they think of it as a bug, I think that's a feature. Because if Bitcoin was tethered to dollar, it would be, sorry for the pun, a stable coin, it would be tethered, right? It can only provide you a hedge by being volatile. It has to be volatile. Every store of value is volatile. Gold is as volatile as Bitcoin, actually, just on a more extended time frame. The scope of fluctuations in precious metals, such as gold, palladium, silver, and platinum, are actually comparable to the scope of swings in Bitcoin. They just happen over longer time horizon, but how much they correct is actually not so different from how much Bitcoin corrects. So from my perspective, those are all features. But then what people present as features, sometimes I see as a bug. Like when people say, all I have to do to send somebody Bitcoin is send an email, and that's an irrevocable transaction. Nobody can stop it. I think that's a bug, because one of the biggest issues is the security. And that's why I think like what is missing with the Bitcoin world is institutional custody. And I think people are have been so focused on saying, I'm not going to give my Bitcoins to Gold, JP Morgan or whatever, or State Street, because they could go belly up. But then they like put them in cold storage and then forget their password. I know the story is abandoned. But the thing is, yes, the big bank can fail, but you know what? I trust big bank to store money better than I trust myself. And I think, and finally, I want to say is that there are things in which people draw daylight between gold and Bitcoin, where I don't see so much daylight. Like, for example, the argument that, electricity goes down, you cannot get you cannot get your Bitcoins. I was like, okay, good luck getting your gold from a bank vault when electricity is down.
I know. Yeah.
And then there is an argument that people say like, yeah, but if you give like a gold nugget to somebody, the transaction is final. Or gold with Bitcoin, you still need all those people to verify it. I was like, yeah, so I give you a gold nugget and you trust me that the gold nugget, that it's a gold nugget without mass spectrographer. But if I want to say one more final thing about cryptocurrency, I think with the price shift on Bitcoin, it went from St. Petersburg paradox to Pascal's wager. So for those who are not familiar with this terminology, St. Petersburg paradox is the idea that if you have really infinite expectation on one side, no matter how little probability of success, you want to put a little bit of money on this because your expectation is infinite. So if you bought Bitcoin for 10 cents or $10 or $10,000, as it turned out, you get a multiple upside. And if you think like, yes, they could confiscate it, it could fail, it could be wiped out to zero, but I'm just thinking that I'm trying to score a big profit if it works. But Pascal's wager is a slightly different. That's more of a matter of survival. Same logic, but thinking, hey, I'm a portfolio manager. What if everything devalues and Bitcoin will be the only thing left? I don't think that's going to happen. I'm just talking as a hypothetical manager. But I need to have something in it so that I'm in a game. It's a survival matter, right? If some reason Bitcoin goes to 1 million, I need to be in the game. And if I don't have 1% of Bitcoin, I won't be in the game. And I think the mentality has gone from the first one to the second one for portfolio managers right now.